What are the latest trends in data storage for financial service institutions?
Well, I think the biggest challenge that a lot of financial institutions have right now is the rapid data growth that they're experiencing. And this tends to be mostly around unstructured data. So their traditional business applications, banking applications, which use databases, they're not really growing that much. But unstructured data is growing maybe 30 to 40%. They're the sort of numbers that a lot of our customers are telling us. And they're finding it very difficult to manage this exponential growth in data and the complexity that entails. And in that industry, particularly banking, securities, there's a lot of regulation, a lot of compliance. So they have to think about data protection and data security. But they're also getting a lot of demands from their business about getting value from that data. So this is where this whole question around big data comes from, is that you're growing these huge amounts of data, but where do I get business insight from? So there's a lot of emphasis on managing this data, but also using tools to generate insight to the business so they can take advantage of it, maybe produce new products or new services, or get new understanding about customer behavior. Well, we used to talk about gigabytes of data. Now we talk about terabytes of data going to an individual order. We have some customers now who take petabytes of data. And the industry as a whole is now on exabytes of data. I mean, these are huge numbers, and they reflect the rapid growth in data that we're experiencing.
What are the requirements of financial service institutions in terms of risk management for data solutions?
Well, a lot of financial services companies have very specific needs when it comes to risk management. So often when we're dealing with a client, they'll have a risk management group, an auditing group, and they'll have a structured series of questions that they ask us about what sort of security that we can provide. So they're very interested obviously in data security, but also data protection. So they care about things like encryption. Is the data encrypted over the network and at what's called at rest when it's in the data center? They ask for things around security of access. So you have things like two-factor authentication, that, proper passwords and tokens and certificates. They're also very interested in not just the technology, such as firewalls, which helps to protect the data, but they're just as interested in the processes and the people. So unless you're able to show a client that you have very detailed processes that are industry standard, like ITIL, and that you're meeting certain, say, ISO certification, then they haven't got confidence in the fact that you can actually keep their data protected and secure. So it's a combination of the right technology, but also the right industry practices are being used for process, and also that you've got skilled people, well-trained, experienced people. So we spend a lot of time with clients actually working through our whole risk management architecture, process, and people, and they look at it holistically. You can't look at one aspect of it individually and think that your data is secure. You've got to look at everything.
What are the latest developments in the cloud industry?
Well, the cloud industry has had a huge impact on the financial services industry. One of the things that's happening is that they're getting driven to be more, IT departments are getting driven to be more agile, more flexible, and to continually drive down unit costs. So a lot of financial services companies have built what they call private clouds. These are infrastructures that use virtualization technology to allow them to have very high efficiency, but also allow them to deploy new services to build the business very quickly. So these are new architectures basically that are being built, often working in unison with what's often referred to as legacy systems. So that's a private cloud implementation, and we've seen that was the first place that a lot of FSIs started with cloud. What we're seeing now is a lot of FSI looking at public cloud. Now, originally there was a lot of reluctance to move to public cloud in the FSI industry because of reasons of security and the compliance regulations that they were under. They were concerned that how can I use a public cloud and keep my data safe? But there's been such advances now in the public cloud. Some public cloud providers provide very secure infrastructures. So a lot of FSIs are saying now, okay, what do I move to the public cloud and what do I keep? And that's a process, I think, that we're just really starting to see happening in the Asia-Pacific region. And they really want to get that low unit cost you can only get in the public cloud. And now these service providers have got very secure infrastructures and process and procedures that the FSI now have confidence in that. So now we're getting a combination of private cloud and public cloud, and even some interesting what's now called hybrid. So we have, for instance, securities firms coming to us and saying, can we take that public cloud that you have and customize it,
Yes.
let my risk management team work with you and make sure that I have a very robust security within your public cloud for me. So it's kind of, you can see how this hybrid is coming. They want to get the advantage of the public cloud unit cost, but then have their own private security. And so they're willing to pay a premium for the security aspect, but they're taking advantage of the public cloud economy of scale and very low unit rates. One thing we're finding happening is in the APAC market, we segment it into the storage industry into 3 segments: enterprise, modular, and entry. Now, entry tends to be very small systems. Now, the APAC market, a lot of companies, a lot of firms are quite small. In fact, 50% of the market in APAC is small firms. So they find the most value out of cloud services. So they're moving to that consumption model more rapidly than enterprise, because they don't have a lot of critical mass. They haven't got big teams of risk management. They haven't got a large technology team. So what the cloud provides them is much more attractive. So we're finding private clouds being built at the enterprise level, and they're using public cloud selectively. As you go down to smaller and smaller financial services firms, they're moving more and more to public cloud, especially since some of the security that you get in a public cloud now might actually be superior to what a small firm can produce. So that consumption model of going to the public cloud, what we're seeing is smaller firms are embracing that much more rapidly than the large banks, for instance, in Asia Pacific. They're using it for point sort of systems, not for most of what they do.